Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, FOMC, Federal Reserve hikes rate by 50 basis points as the whole world was expecting after the CPI. But FOMC also signals rate to rise to 5.1% next year. So there will be further increase in interest rate by next year. So as a result, we saw crazy amount of volatility during the FOMC. At first, we saw a big green candle on the chart of DXY. There was a heavy fall on the chart of gold, but ultimately we saw DXY forming a doji, and as you can see, the DXY is still very much weak. Though it has formed a small green candle right now, but the overall structure of DXY is not very strong. You can see that DXY is standing at 103.82, and few weeks ago it was around 113, 114 level. Just look at the fall, my dear friends. And as I have already been saying, that we do not have any proper support on the chart of DXY. So especially during this week, if we see further downside on the chart of DXY, then yes, there is no proper immediate support on the chart of DXY. But if it tries to go up, you can see that we have got multiple resistances. No support, no proper support, but multiple resistances on the chart of DXY. First of all, the trend line and the 50 moving average at the top around 104.6070, and then we have 105.50. There are multiple resistances, but as of now, DXY is struggling. DXY is trying to take support around the trend line, but we don't have the proper support, strong support. Now let's have a look at the chart of gold. As we can see, that gold is under correction right now. But if we also try to analyze the structure of gold chart, then more or less the structure is bullish, because we can see that more or less it is forming higher highs, and most importantly, it is forming higher lows. It is not breaking the previous lows. So as a result, the structure is very much bullish. But the structure is not that extreme bullish, because you can see the swings are getting smaller. Okay, and if I try to draw a line at the top, then I can see that more or less it resembles a wedge pattern as well, and wedge pattern is a trend reversal pattern. But I don't think so we'll be having the trend reversal this week. Okay, I think market should be continuing, okay, within this between these two lines only. So as you can see that gold is coming down. Okay, gold is falling, and right now standing at 1795 level. So the first support on the chart of gold will be 1791 to 1787. This is the first support on the chart of gold for today. The reason behind considering 1791, 1787 is that, first of all, we have the trend line. You can see we have a trend line which is also acting as dynamic support for the market. In addition to that, around the same level only, you can see we also have the blue line, the 50 moving average also. Trend line, 50 moving average to support. So as a result, we are considering 1791 to 1787 as the first support on the chart of gold. But as we can see that gold is showing a red candle, and selling pressure is also very much present. So once market will come down to the support level, observe the market first. Do not take a buy position immediately, because right now more or less volatility is there. Market, I won't say that extreme volatility, but yes, we can see the presence of sellers is very much there, and we cannot deny that. So as a result, once market will hit the support level, observe the market first. Okay, observe the market first. If the market would have been less volatile or low volatile, then we could have taken a buy position. But right now you need to observe the market first, because after all, no level is permanent in the market. And most importantly, this is not a very strong support also from the past. Okay, we are just considering a trend line that market has already tested 5 to 6 times, and we are considering a moving average. So these are not very strong support levels, but our capital is limited, so we cannot gamble with our hard-earned money. So as a result, observe the market first around this level and see how the market reacts. If you see market forming a hammer pattern, if you see market forming small green candles and trying to take support, market forming a bullish engulfing pattern after a few hours, then only take a buy position. And in case you see, then market is breaking the support and going down, because if the same selling pressure continues, then obviously market will break the support. After all, this is not a strong support also. If market breaks the support, do not take sell position immediately. And the reason is that we can see that overall structure of gold is still very much towards the upside. So whenever you take a sell position in an uptrend market, there is a high chance of getting trapped. It means there is a chance that market may hunt down some stop losses and market may try to go up again. In that case, you will be trapped if you take a sell position. So don't make the mistake. If market goes down also, okay, just observe the market, whether it head towards the next support or it again bounces back after hunting some stop losses. If market starts going up after hunting down some stop losses, you can take a buy position again. You can take a buy position above the trend line again if you see market reversing after hunting stop losses. But on the other hand, if market head towards the next support, the next support is 1779 to 1775. This is the next support on the chart of gold. If market head towards the second support level, okay, then wait for the market to take support and bounce. If market bounces, you can go for a buy position. So these two are the support on the chart of gold right now. This is our first support, 1791 to 1787, but this is not a very strong support, it's a weak support. The second support is 1779 to 1775, but this is also not a very strong, so not a very weak support also, but more or less moderate support. Why we're considering this support? Because of previous price rejection around this area, as well as we are considering the Fibonacci retracement level here. Okay, so if you combine all the factors here, then yes, there is a possibility that market will take support around 1779 to 1775. Okay, in case market breaks it and market shows extreme volatility, okay, because market is full of surprises, if market breaks this level, obviously we can't help it, then you can take a sell position. But as of now, okay, as of now, there is a good chance that market will take support around this level, the second support. Okay, the first support may work also, okay, but you need to observe the market first, because after all, not all the levels in the market have the equal amount of strength. Okay, and as resistance, okay, as resistance, we have this level at the top, 1813 to 1807. This is the resistance level on the chart of gold right now, at least for the day. First of all, we have the trend line. We have the trend line as the dynamic resistance, but I don't think so market will have the strength to hit the trend line today. So as of now, 1813 to 187 is the resistance for the market. Otherwise, the trend line is around 1830, 1832 level. So these two are the resistances for the market right now. Be careful during the first support, because there is a chance the market may break also, considering the present selling pressure in the market. Okay, so please be careful, because there was extreme volatility yesterday, and as you can see that gold, okay, gold is not very positive right now since yesterday. There was some extreme volatility yesterday. Anyways, that's it. Hopefully you got my point. Try to be careful, follow proper risk management. My analysis may not work also, because no trader is 100% accurate. So please be careful, respect your hard-earned money, respect your capital. Bye bye, take care.